Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to talk about the Coinbase IPO and we're going to break this down and I'm going to give my thoughts at the end of the video. So what I want to do is I want to turn this into kind of like a quick presentation form, just like I did with my stock market for beginners video. So we're talking about the Coinbase IPO. Well, it's not technically an IPO, which I'm going to get into right into this video, but I want to see if it's worth investing into or not. So in this video, we're going to talk about Coinbase 101, kind of just what they do and what they are. Where is it going to be listed on? We're going to talk about a direct listing versus an IPO because they technically did not IPO. They technically went public through a direct listing, which is somewhat rare these days. And then also we're going to talk about what it's valued at. We're going to talk about the numbers. And as always, I'm going to give my thoughts at the end of the video. So to get right into it, just real quick, if you haven't used Coinbase, I've been using Coinbase since about 2018. I use Coinbase Pro for all my Bitcoin transactions, which you can tell right here with the shirt. Nice little Bitcoin grenade right there. So I've been using it for about 3 years now. And if you want to get $10 in free Bitcoin, simply click on the link down in the description below. It'll be in the top comment and also in the description. You transact $100 and get $10 in free Bitcoin. I also get $10 in free Bitcoin. It is a win-win. So let's start with Coinbase 101. What is it? It is the largest crypto platform in the United States, Binance being #1 in the world. And basically it was founded in 2012 by Brian Armstrong, whose net worth is right around $6.5 billion at the time of this recording. Since we're about to IPO or direct list or go public later today at the time of this recording, I'm sure that net worth is going to go up significantly. And then also Fred Ursham as well. So Coinbase right now has 56 million verified users. Their quarterly volume traded is about 335 billion. They have $223 billion worth of assets on their platform. They have 1,700 employees and they're active in over 100 countries. So where is this publicly traded company, this Coinbase listing, going to be living on? What exchange? So it's going to be on the Nasdaq. It's going to happen Wednesday, later today at the time of this recording at 1:30 Eastern Standard Time, trading under ticker symbol COIN. And it's going to be Nasdaq's first major direct listing. So what is a direct listing? Very quickly. So if you have an IPO, which we're all familiar with, especially if you watch my stock market for beginners video, an IPO is simply an initial public offering where a company will go from private to public with an investment bank. So an investment bank, they provide all the analysts, the underwriting, they give you a fair price per share for what you want to offer or go public at, and they basically introduce your stock to an exchange. So the company raises money for itself in this case by selling the newly issued shares to the public. Remember, you're giving up equity for money, so some insiders may then cash out their stock, so the company makes money through this IPO and the insiders get paid. However, Coinbase went direct, or they went public through a direct listing. So a direct listing is when the company's actual insiders that own shares of the equity, the privately held stock, if you will, they offer their own shares through the exchange to the public through public investors. So they're not raising money for themselves or for the company by selling new shares. Only the insiders are selling the stock to public investors. So some examples of this in the past have been Slack, Spotify, and Palantir, which are relatively new, but those have all been done on the NYSE, the New York Stock Exchange. So moving forward, what is it valued at? So Nasdaq assisted a reference point of $250. Wow, $250 a share yesterday on April 13th, which gives Coinbase a value of $65 billion. Some analysts are actually projecting a $100 billion valuation. This is a quote from a research paper I'm going to show you later, but basically this person was saying that Coinbase's expected valuation of $100 billion implies that its revenue will be 1.5 times the combined 2020 revenues of two of the most established exchanges in the marketplace. He's talking about the NYSE, New York Stock Exchange, and Nasdaq, okay, which is pretty big. So if we actually look at a chart here, the source is coming from Dow Jones Market Data. You can see that Coinbase's potential valuation compared to CBOE, the CME Group, which is the Chicago Mercantile Exchange Group, ICE, which owns New York Stock Exchange, and Nasdaq, you would see that it's significantly bigger than the next biggest one, which is CME, which is crazy. So the numbers very quickly, this is year over year numbers. They went from 483 million to 1.14 billion in revenues. Their operating profits went from negative 45 million to 409 million in the black. and they generated 87% of their revenues from trading or selling Bitcoin, Ethereum, and about 50 other cryptocurrencies or coins for retail and institutional investors. That's where they make a majority of their money. So before I get into that article, I just want to highlight this little snippet here. So the people from New Constructs, they're basically an investment firm or analysts, if you will. This is a direct quote from their paper. So the gentleman's name is Trainer. Trainer said that based on his calculation, Coinbase's valuation should be closer to 18.9 billion. Remember, we said that some people were bullish at 100 billion in total market cap. So he thinks it's going to be an 81% decrease from the $100 billion expected valuation. So if I actually go into this research paper that I'm citing here, you can see that I've highlighted a bunch of little snippets here. If I went through this entire article, this would probably make the video like 35 minutes long if I broke down all this stuff, which I'm not going to do. I may even turn this article here into its own video. But just very quickly, some of the highlights that, some of the snippets that I wanted to highlight was that even though Coinbase's revenue has surged over the past 12 months, the company has little to no chance of meeting the future profit expectations that are baked into its ridiculously high expected valuation of $100 billion. So the crypto markets are very young, and what we expect are many more companies to compete for the profits that Coinbase enjoys today. As the cryptocurrency market matures, we expect Coinbase's transaction margins to drop precipitously. Now, if you keep going, you can see here that I highlighted that little snippet that says it should be closer to 18.9 billion, an 81% decrease. And they cite a lot of different numbers. They do discounted cash flow valuations. They do a lot of different things that are saying like, hey, basically it's going to be more expensive than Intercontinental Exchange, which is the parent company of New York Stock Exchange. It's going to be more expensive or valued higher than Nasdaq, if you will. But when you look at like the trading volume compared to the transaction revenue as a percentage of their volume, you can see that Coinbase is much higher at 0.46% as opposed to something like a 0.01%. The reason they cite this is that because they think that the cryptocurrency markets are so young in its infancy that once it starts to regulate or become a little bit more mature, that these transaction revenues as a percentage of their volume are going to go way down, thus lowering the revenue of Coinbase. So you can see here the rapid revenue and profit growth from 2019 to 2020. And then there's a couple other charts here. I'll actually link this article down in the description below. So if I go back into my presentation, I'm basically going to give my thoughts here at the end. So what I'm going to give you a quick snapshot of is, why now? It's heavily reliant upon Bitcoin. Could be email in 1996 and just buy blank. So let me finish those and allude to all those things. So why now? So there's less regulatory risk right now. If they were to do something or consider doing something like this in 2017 or 2018, there's always talk about, what if they ban X, Y, and Z? What if you can't operate in a certain city? What if you can't operate in a certain country? There's municipality risk, there's geography risk, there's a bunch of different types of risk. Now, I think that they decided to go public because a lot more, I guess the atmosphere, the environment for crypto is becoming more and more neutral to potentially friendly. There's even like people in the United States government, like senators and governors that are endorsing things like Bitcoin, for example. So that could be a one-off example, but that's kind of like my gut feeling as to why they did this now. And then also I think that, we're kind of like in the middle of a huge bull market right now, basically starting since March of 2020. So their business is almost intrinsically linked with Bitcoin and Ethereum, which is my second bullet point here. So the second bullet point is it's heavily reliant upon Bitcoin and Ethereum, meaning that a ton of their revenues are tied to how well these two cryptocurrencies do or how often they're traded, okay? Because they take a lot of fees from all these trades. So it's heavily reliant upon Bitcoin and Ethereum. But to the upside, I know a lot of this sounds negative, but to the upside is that the example that I always give when talking about Bitcoin, for example, is that we're so early in terms of being early adopters, is that this could actually be email in 1996, which is my third point here. So what do I mean by that? So if you remember all those news shows or the news specials in the mid to late 90s, people were saying like, oh, today at 6 p.m., find out how you can send digital mail. Everyone's like, oh, yeah, right, that's never going to catch on, right? well, that's called email, and everyone uses email today, right? So I feel like not only is Bitcoin in its infancy, but most cryptocurrencies in general. Most of you that follow me on Twitter, you know that I'm pretty much just a Bitcoin investor. I don't invest in anything else. I consider them I'm not going to say the word. I don't want to get demonetized, but it rhymes with Bitcoin. It starts with SH. Okay. So I do own a little bit of Ethereum. I own mostly Bitcoin. But basically, you have to realize that the cryptocurrency in general is in its infancy, which could be huge for exchanges like this in the future because it may start to get a bigger and bigger market cap, more transactions, more widely adopted, et cetera, et cetera. And then finally, if you look at my fourth point here, just buy Bitcoin. You know, honestly, like you can mess around if you want to hold equities and you want to have this as part of your portfolio, maybe in kind of like a speculative area of your portfolio. That's great. But at the end of the day, when you're buying Coinbase, you're buying Coinbase's ability to generate revenues from not only Bitcoin and Ethereum, but about 48 other I don't want to use the word, I don't want to swear, other coins as well, right? So these coins, if you look after 2017, how many just fell off the face of the earth? There's a whole bunch of ICOs with initial coin offerings. There's a bunch of people scamming people for money, essentially, right? And only the true hard assets prevail, which is typically Bitcoin, right? So at the end of the day, I'm more of a proponent of just buying and holding Bitcoin once you understand what it is and you have the proper conviction and allocating a certain percentage of your net worth to that, as opposed to just, you know, buying into a speculative direct listing public offering, if you will. So those are my 2 cents. Whether you agree or disagree, let me know down in the comments below. I'm always open to hearing my audience's thoughts. Just a quick update on the school, Whiteboard Finance University. I was going to launch this as a school with like 6 courses, but I'm realizing that it's really difficult to make proper high-level, high-value products. So I may just start releasing these individually, and when I have enough of these individual courses, that's when I'll launch the school with a different membership type model, making it more cost-effective for you, the end user. Thank you so much for watching, everybody. Get your $10 in free Bitcoin down below. I highly recommend everyone read Vijay Boyapathi's The Bullish Case for Bitcoin, The Bitcoin Standard, Inventing Bitcoin. These are all great books to actually understand at least Bitcoin, and then maybe you can delve into other crap coins once your understanding is a little bit more mature. All right, everybody, thank you so much and have a prosperous day. Don't buy coins.